David, nice to have you back. I can't think of a better person to have on my first show of 2023. Let's talk then a little bit about the gloomy prognostications for 2023. We've heard what the IMF thinks, but you think we escape recession. Why?
Well, I think we narrowly escaped recession. And the reason for that is if you look at growth last year, where did it come from? Well, it came from this stack of earnings, which was built up thanks to governments making transfers during the times of COVID. And this money was spent, and it was enough to offset falling real wages. And it was enough to offset in the United States tightening fiscal policy. Now, that was terrific. It was a balance sheet offsetting an income statement in a way. And I think this year it has to go the other way around. So it's a big question mark as to whether you can reduce the rate of employment in the US and rein in wage and salary increases without actually increasing employment and hitting wages and salaries so hard that consumption dries up. Now, I think it is just about possible that we can achieve that. But it won't feel very good. But it will be better than Europe. And I think Japan will be fine, more or less, in the way that it is. And China will be pretty awful. So if you add all that up, you have a world which has to continue to cope with all of these uncertainties and very low rates of growth, which looks like the world is actually transiting to zero growth, where we don't bake any new economic cakes. We just argue about how we'll slice up the old one. And the final point I would say is we are not arming Ukraine to win. We are arming Ukraine not to lose. That means that this time next year, we could be talking on this program and the war of attrition would be ongoing. The worst scenario being that Russia actually starts to win a war of attrition and that Xi Jinping moves China closer to the Russian line and is more outspoken in terms of support for what he sees as a Putin victory. That would be the really nightmare scenario. So frankly, no, we're not near to a bull market. Are we near to a breakdown? Well, that really depends on whether you get lower interest rates. We've been talking about the economy, but I don't think central bankers will cut interest rates much because price levels are astronomically high. And I think things like energy, due to Putin's problems, will probably move substantially higher to 120 a barrel during the year. And I don't think central banks are going to cut rates in the face of that sort of performance by, say, energy and quite potentially agricultural products.
David, well, let's just pick up on that, because I know one of your other calls is to go long the euro against the dollar and to pick up Japanese yen here. And we've seen lots of asset classes pivot and change their trend through 2022. It looked as though the dollar was beginning to lose that upside momentum into the fourth quarter of last year. Is that going to continue then into 2023, that ultimately you're going to be buying those $120 a barrel oil at substantially less valuable dollars?
I think that's probably likely to be the case, that the dollar will continue to move down for several reasons. Number one is I think the Fed will probably signal a lesser increase in the rate of interest rate rises, if not a complete stop, but it won't signal much easing. But the ECB, for example, will continue to tighten. They're way outside their mandate, and they're always wrong about the economy. So they'll tighten and make the European recession worse. So relative monetary policy speaks in favor of the euro and the ECB. And of course, in Japan, what you're looking at is the end of Kuroda. Now, in my humble opinion, and I can probably join him in this, Kuroda is certifiable. Monetary policy in Japan is just insane. So when he goes, that policy goes. With the tightening, you get higher JGB rates. They ditch yield curve control, and the yen probably becomes, among the bigger currencies, the strongest currency in the world. So that would be my currency forecast for what it's worth, which is probably not very much.